Good day, guys. Welcome back to Steyn Trading. In today's video, I'm going to be showing you one of my recent strategies that I have been working on, which is called the Fibb Block Strategy. So let me break it down for you guys. In this video, I'm going to break down how the strategy works. I'm going to give you my back-tested results, and I'm going to show you how you can potentially add a couple of extra % to your bottom line for this year by not, or potentially next year, without taking a lot of risk up front. So let's quickly jump away with this strategy. So the first thing that you're going to do is this strategy was only back tested on gold. You can go and try it on other pairs. We didn't find it as profitable on other pairs as we did on gold, and you are more than welcome to go and try it with other pairs and take it from there, guys. So step number one with this strategy is you need to open up a clean gold chart. So what we're going to do is we are going to have a clean chart here. Let's just make sure, remove all three drawings there. All right, so that's what the chart is going to look like. So step number one is you are going to go to the 1 hour chart. So you're going to go to the 1 hour chart, and what you're going to do is you're going to look for 6 months worth of price data. So you are going to scroll back your chart and look for 6 months worth of data. So what you want to do on the 1 hour is you want to identify the most recent swing high to swing low. So as you can see here, gold has been trending all the way up from here to the top here. You can see we've pulled back here now, so we're somewhere in this range. So what you want to do is you want to get one of those swing lows, for example here. So this is a swing low here, and then you're going to take your fib and you're going to pull your standard fib onto the chart. Now this is very important. I have 2 specific fibs that I use. I will be doing a video in the future about my 2 fibs, but for today I'm just going to be using the standard fib. The standard fib has, let me just make sure I've got the right one here. Charting temp. Okay, so this is the standard fib. It's got the 0.236, the 382, 0.5, 618, 786, and then the 1 and the 0. So what you're going to do then is you are going to just take the tool, your line tool. If you don't know where it is, it's on this side here, and you are going to highlight each one of these areas. Why? Because you are looking for areas of support and resistance. But your area of support and resistance is not based upon just where your eye looks. This is more from a mechanical approach, because that's what the fib does. It shows you the retracements, and you're going to be marking out these specific areas like this. So you're just going to be marking out the areas like that. So, but that's on the 1 hour chart, guys. So once you have marked it out on your chart, you are then going to drop down. So you're going to delete your fib on here on the 1 hour. This is the most recent price movements you can see here, and you're going to drop down to the 15-minute. And on the 15-minute, what you're going to look for, let's go back a bit. So let's see when did this specific session start. So let's take it from here, right? So what you're going to do is you're going to have the same fib that you're using. You are going to pull from this block to that block, right? So let me open the charts up a bit to show you guys this. So you're just going to draw this block in. Now the level that is important here is the 0.786. That's the important one. So how does this strategy work? When the price breaks above, for example here, when the price breaks above the line, you're not going to wait for, the only confirmation you're looking for is for a candle to close above that area, right? Then you are going to take what we call a pending order. So once the candle breaks above, you're going to enter a pending order as such. You're going to target the top of this block, and your stop loss is going to go just below this area. So normally what you're looking for is you're looking at least for a 1 to 3 risk to reward ratio. That's what you're typically looking for. Some of the blocks will not have that, like these ones are a lot smaller, so you're not going to get that. You'll always be above 2.5, but in general that's what you're looking for. You're going to put a pending order in there, guys. So you're going to put in, if it's a buy, you're going to put a buy stop in, right? So if the price is underneath, You're going to put a buy stop in, and you're just going to leave it. You're going to put the TP in there, and you're going to put the stop loss in there. That is pretty much how a buy will work. Now what will happen is the price will then come. As you can see here, the price has come. Maybe it has stomped out here. So let's see. No, it has not. So price has continued, but let's say for argument's sake, you did however get stomped out there. What you're going to do is the moment you get stomped out and you have a candle, you see that closed below it, then you are going to re-enter the trade. If you hit stop loss there, just going to leave it, right? Depends on your spread. So what's important with the strategy is the stop loss is variable. So what you can do is you can maybe extend it so that you always have at least a 3, not a 309, but maybe a 302 type of. So always just keep it above a risk reward of 3 on the bigger blocks, right? So what you're going to do is your price then came back up and it TP'd right up there, as you can see there. Price then came down. It didn't really close above that area. Here it closed above the area. So what you're going to do is you're going to enter a long. So you're going to pull your fib up there. Limit orders again, guys. Pending orders. And you're going to look for another buy. Now, as you can see here, the buy was only engaged later on. This is what makes the strategy so beautiful, is the fact that you have, with the limit orders, you're able to control a lot more of the process. Now, as you can see here, try and keep your risk to reward above 2.5. Or 2.4 is also fine. So 2.4, so adjust your stop loss to be between 2.4 and 2.5, right? That's what you're looking for. Now, you can see this trade also ran to profit. Right, let's have a look. Actually, this one needs to go a little bit higher there. All right, so let's look at the next trade. Next trade, price came through, went up, came back down, pushed up to here. Now, this is something I want you guys to pay attention to. Now, you ask yourself, but Magni, what if the candle closes below here? So let me open up the chart so I can show you guys this. What happens here? Let me show you guys. So you guys can see here that price did slightly close above there. Now, let me show you why it's very important for you to enter on the 0.72, because if you brought your fib in here, you would only put your limit order there. So these flip-flops between the area doesn't matter, because you're working on pending orders. You're not market executing, right? So you would then put your fib here. So you had 2 winners now. You drop your fib on there, and then you'll take another buy order. And the best part about this is if you go to bed at night, you can put the pending orders in and just let it flow. Right, again, you want to try and stay above that 3. There we go. So you can see here we were taken out of the trade there, right? So that trade was a stop loss. Now what you're going to do is your next one, you're going to program in your sell. Again, you're looking for that 1, 2, 3 potential. If it's a smaller block, then you can make it a bit smaller if you want. Right, now you can see here. Now let's say you did, however, go for a 1, 2, 3, right? Okay, so you see if you were at 306, you were fine. But if you were like on 311 and that, you might have gotten wicked out. But let's say you did get wicked out, right? So price did wick you out here, just from a statistical point of view. So now you've had 2 losers in a row. This one, you got wicked out of it, right? Now what happens? Price comes back down. Here you can potentially get into another sell, which can happen. Short position. And same area there. Exact same trade setup. Same TP. And as you can see, you got wicked out again. You see that right there, you got wicked out again. If you had entered another one now, let's say you did take another buy here, which would have happened. So yes, this one does have a 4 losing streak, it does. But the risk to reward is phenomenal. So now you get wicked out, price is a bit flip-floppy, it gets you in there, takes you right out of there. Then what happens? Now you have your next set. So here you have a short position right here. Take the short position to there, all the way to the bottom of the block. And as you can see, you ran all the way into profit. If you want to micromanage the trades, you're more than welcome to. It's entirely up to you how you want to. If you want to take, just make sure you do your proper backtesting. So now you can see here we have 1, 2, 3, 4, 5 losing trades, right? But now remember, just before this we had this trade, which was a winner, right? So here we won 3 times the size. So this is 3. This one we won as well, which is 3 times the size. No, it was about 2.5. So we're 5.5 up. Okay, so 1, 2, 3, 4, 5. That means we're 0.5 still up on the account because our risk to reward is huge, right? Now, price goes up to here, comes back down. Now, you would have most probably, if you were keeping your stops very tight, you would have gotten taken out here. You can see it here, right? You would have gotten taken out. So this would be a 6 streak. So now you're in the red, right? So based upon your stop loss here, you can see you got taken out there, right? Got taken out of the trade there. Yes, you could have maybe looked once you got taken out of the trade and you see it going, you can try it again. It's entirely up to you. But now you are already, now we have how many? 1, 2, 3, 4, 5, 6 losing streaks. Now something to note, for example, like this trade. This trade was a trade I would not have taken because it was outside of my time zone, right? But let's, for our backtesting and strategy, let's say this is what happens. Now, as you can see, your limit order got engaged here. This is 2 o'clock in the morning. You got taken out of your trade at 2. You're not going to be up again to take the trade again. So this would have been a losing trade, right? A losing trade. But now, something that can happen is you wake up, depending on where you wake up, let's say it's 7 o'clock, you can see the trade is already run. It's out of, there's no way for you to get back in the trade and potentially scoop on it. But now, let's have a look at the next zone. Now, as you can see, price came up, came back down, and then it gave you another entry right here. Stop loss goes there. TP goes there. And let's say you stick to that 2.5, where whatever you decide, 2.89, it's entirely up to you. The closer you can keep it to 3, the better it's going to work out overall. Right, so here you have another one, 2.8. So although you had 1, 2, 3, 4, 5, 6 losers, so you lost $600. Here you made $550, and here you just made another $289. So 5, 6, 7, you're $800 up, you lost 6. So you're about $200 into profit, right? And this is all in the span of a week, maybe a week and a half, right? Now you're going to do the exact same thing here again, right? So you're going to take a short. You'll see here your shorts never got engaged. You can see it. So that's the beauty of this strategy is, yes, you do hit some losing streaks, which is normal, but overall your risk to reward is so great that it covers everything. So what you're looking for is you're looking for a trend like this. So that was a lot of consolidation. So that's why I'm showing you the strategy when consolidation happens, because that was probably the reality. When you start the strategy, you might hit an area of consolidation. Now, because price went down there, right? You were out of the trade here. Because price went down here, look at this now. So let's say you took another long here, right? Took another long here. Stop loss, same area there, got taken out of the trade there. And let's say next one you decide, okay, cool, you know what? Price went down there, it came back up. It looks like it's holding there. Let me take another buy here. Sometimes you got to take something 3 times to see success. But the best part is, even though you lost twice, the third time when you do your risk to reward correctly, you are going to have phenomenal results. Now, as you can see here, you had another nice 2.718 trade there, which TP'd, right? Now, let's have a look in this block now. So you're going to draw your fib up on here, all the way to there, and then you're going to take a buy trade. So you're going to engage your buy trade there. You're going to target the top, right? And then what you're going to do is you're going to bring this in. Remember, you want to stick to that 1, 2, 3 kind of like there, which is good. And you can see that this trade went all the way to TP for you, right? All the way to TP. And as you can see, now you've got 2 winners. This one is about a 2.71. This one's a 3. And now look at it. Let's look at the next block. Right, so next block. So all you're doing is you're just targeting from block to block. You are just targeting the block to block, not overthinking it. When a candle closes above, you take a long, and when it closes below, you take a short. Now, the strategy is very simple. One of the things that I like to do is I like to keep my strategies very simple. I don't want to overcomplicate. Yes, by keeping your strategy simple, you do run into some crazy losing streaks. I've never had a longer than a 6-1 on this strategy. And sometimes at night, you'll get stomped out. You won't get back in a trade, which does cancel out a lot of it. So here we are, a 3.4. You can see price came up, never came to our area, went back to here, and then here's consolidation. As you can see, consolidation starts forming. But again, you're going to take the trades, because at the end of the day, everything will balance out once you take enough trades. Okay, so you're going to keep your risk reward very tight here, and you're going to try and maximize on as much of you want to stay above that 2.5. You got taken out of the trade, guys. That's absolutely fine. It's not an issue. So you can see here, you got taken out of the trade, took another one right here, got taken out of the trade again, and then you would have potentially entered a third time. So you had 3 losing trades in a row here. You can see that your buy trades here, your longs would have never gotten engaged, right? So yes, you got 3 losing trades. You got 1, 2, 3, 4. The stats on this thing is it's about 44% correct. And then obviously you would engage a long here. And as you can see, that's the wrong way. You would have engaged a long here. And you can see that you would have gotten taken out of the trade right there. Now, again, you hit. See, when consolidation hits, you have 1, 2, 3, 4, 5 losing trades in a row. But now, you're going to continue the trend. You're not going to give up on it, because it's part of the strategy is to keep going. Look at this. Winning trade. And because you program your trades in, when you do get a trend, it's you really profit big. And because your risk reward is so big, this is about the only strategies I found that has a really, really good big risk reward overall. And if you keep those stop losses tight and you get that smooth area that you're looking for, you're really going to pocket big. Now, as you can see, price is coming down here. It's bounced here. So what's going to happen? You've already TP'd here. We all know that when you bounce here, so let's see if you got taken into the bottom block here, because you would have put in a limit order here. So you might have gotten taken in there, which would have been a stop loss. Another one you would have taken would have been here. So the important part about the strategy is to try for you to avoid these multiple losers like this. What you can do this is you can look, okay, this one obviously it bounced properly. You can see it went in and out of the blocks, but sometimes it just wicks out, and then you can hold back on an order, which can overall improve your statistics overall. But now here you would have taken a short maybe, but this would have been a very quick wick here, so maybe you didn't get the trade. It all depends on when you trade. Now let's say you took another trade and it came back up here, and you would have hit stop loss on this one, because you see it would have gone in the opposite direction. You would have taken another sell here, which you would have gotten a TP, taken a buy here, which you might not have gotten a TP on, and then you took another sell here, which you got a TP. These ones might not have gotten engaged because of the 0 point. So you can just go and back test this for yourself, and then go and have a look at the overall. Doesn't want to place it there. So you can go and overall check it for yourself, and it all depends on where you start the strategy. So you can see here, you didn't get taken in there. Yes, you might have gotten taken in there, and then you hit stop loss, but then you had a winning trade there. Here you had a losing trade. Here you had trade coming up, a losing trade. You might have waited here because it never broke underneath here, which would have stopped you from taking a bad trade here. Here you would have gotten in, you might have gotten stop loss. So there's many ways for you to manage it. You can take half of your profit off the table if you want. It's entirely up to you. And then the moment when you start getting these breakdowns where you catch a very nice trend, you tend to have some really big trades. You'll have a 2-year, a 3-year, a 3-year, which makes it 3, 6, 9. So that's 9 times your losers. So you have to have 9 losers in a row for this trend. But now the big question is this really, really as profitable as what I'm claiming? Well, let me show you guys the latest stats on this strategy. So yes, I showed you the good, the bad, and the ugly of the strategy. I'm not going to give you all the nice fluff around and show you, oh, these are all the winners. Look how nice the winners. Yeah, you're going to have sometimes a 6, a 5, a 4 trade losing streak. It's normal. On big risk rewards, it's normal to have a losing streak. It's natural and normal, right? So let me show you guys. In my Discord, you can go and check out under Steyn Trading Academy. Here is our Fibb Block Strategy. Where is it? Yeah, Fibb Block Strategy. And if you click on it here, so we have 100 back tested trades that we did, and then we did 100 tests on a demo account, and I am busy trading it live now, because for you guys that don't know, if you do a back test on a strategy, it's not always the same with real life, because in real life you have life that you live. There's things that you do. Sometimes you don't enter a limit order, or there's a lot of factors that goes with it. Now, as you guys can see here, we had a total of 55 trades taken from today. So I started my first live trade, I think it was the 6th of September. Was it 6th September or 6th October? I'm not exactly sure. Let me just see on this. No, it doesn't say the date. But I think it was either 6th of September or 6th October. I think it was 6th October. It was 6th October. So from the 6th of October to date, I've taken 55 live trades. 22 of them are winners, 33 of them are losers. So my win rate is an average of 40%. Now my average win is close to $294 for a win, and my average loss is about $109. So you can see it is a 3 risk to reward ratio. Try and keep that 1 to 3 as you can, because it's really going to put more money into your profit. Expectancy of profit is $52.11. $52 per trade. That means for every trade I've taken, I've made 55. Whether it was a winner or loser, I averaged about $52. Right, I made a total. So over 50 trades, I was able to grow my $10,000 capital to $2,605, only using 1% risk on my account. So for every trade, you should grow it that way. But very important about it is, you got to stick to the rules. Don't skip the losses or chase entries, and you maintain your risk to reward ratio. Those are 3 factors that are going to help you to succeed with this strategy. Now, is there any special thing you need from TradingView? No, you don't. You just need to make sure that when you do your 1 hour fib level, when you check up your fib level here on your chart, make sure that your fib is lining up with price. So when you zoom it back, right? Let's reset the chart. Let's zoom it back. When you zoom it back, make sure that you get the most that the price does. However, so if you I know now that obviously if you look at these trades, you can see that these would have been existing trades. So how the heck could you have drawn your fib from here to there? So all these trades that were taken here could not have been taken because the fib was drawn from there to there. I beg to differ. Because what you can do when you are trading and gold does hit a new high, you might say, yeah, but Marnie, come on. I mean, this price action didn't exist. You're just doing a backtest. Hold on. There is something what we call a fib extension tool. So if you drew your first fib, you instead of having to redraw the zones, you can use the fib extension. So what would have happened is once you fib the bottom section here, you can then use your fib extension rule. And if you look at your fib extension tool, it would draw out the exact same areas for you in the future. So you would have still gotten those trades. Even though I'm doing a back test right now and showing you history, that what makes the fib so great is you can predict the future potential zones. So this could have been a very realistic setup using your fib extension tool. So whenever you are putting your fib on, so if you did put your fib in, for example here, when gold does go for a new high now, where it's going up, I can bring my chart back down, I can take my Fibb extension tool, take it from the bottom. Just make sure that when you use the Fibb that you have the 0 to the 1 set up, right? All the way to there, and just make sure you've got the basic levels on there. So you see there, that's why I like the Fibb, because it's not just a lagging indicator, it's also a leading indicator, because it's already shown me potential areas where the price is likely to bounce. There. Just keep those basic zones, guys. Just mark those zones up to the 0.786. There it is. There is my future zones. There they are. So for the guys that are like, no, but this is price history already happened. No. The Fibb is very great at predicting future potential reversal points. And then you can just simply trade them. So maybe even the stats would have been better than what I just pointed them out because the Fibb has an extension tool. So once price hits a big high, you don't have to go and wait for the price to refib. Just put your Fibb extension tool on and then trade these potential upside areas. It's as simple as that, guys. And the best part about this strategy, it's a plug and play strategy. You simply put the limit order in. If it gets taken, it gets taken. If it hits stop loss, and as you've seen with our statistics, if you have a look at our stats, I mean $52 per trade. So over 50 trades, you're averaging about a $50 income per trade, whether it's a winner or a loser. Yes, there's a lot of losing streaks. I mean, I just showed you, you have a 6 and a 5. So you do sometimes hit when there's consolidation. There, you do hit some areas of consistent losers. But overall, the stats are concrete. I am trading this myself. So if there is any update, then watch the channel. I will show it to you guys. So yeah, guys, here is a very nice, simple, easy strategy that you can trade, whether you're doing wherever. If you're traveling, if you, like me, I'm a trader, I'm a business owner, but I'm also a mom and I'm also raising my kids. So it's a great strategy for me to just plug and play. Just put the trade on. When it gets taken, it gets taken. And when I make profit, I make profit. When I make a loss, I make a loss. But overall, the strategy is very easy and simple to follow. And unfortunately, with such easy and simple strategies, you do tend to have losing streaks, which I'm sure you saw. But yeah, I hope this one really helps you guys, helps you to break it down. If you want to learn more, join the Discord. Come and join our Telegram group. Come and check us out on TikTok. I trade live every day on TikTok from 10 to 1. Come and check it out. Come and learn. And if you got so many inputs that you think might improve the overall stats of this strategy, I'm more than welcome to have a look at it. And I will keep you guys posted. So our trading results goes on here live every single week. So every one of our strategies we update on our Discord. So every single week we update on what's our profitability rate, what is happening with our strategy. So all of our strategies are consistently monitored, guys. So I hope this really helps you guys. And if for you guys that are lazy and you don't want to trade it, then we have a copy trading system with our preferred broker Headway, where if life is too hectic for you at the moment, but you still want to benefit from trading, these are the strategies we're trading. Simply send us a message. We'll connect you up with Headway, and you can join our copy trading system. Just connect to our company accounts, and as we trade them, they duplicate the trades on your system, and you get to benefit from our trading as well. So you don't have to specifically sit behind the chart. So guys, I really hope this one helped you, and I'll see you guys in the next video.